So in this tutorial, let me talk a bit about the financial statements, as these are the ones by analyzing which you are going to analyze a stock or a company if you are using fundamental analysis. So let me talk a bit about the financial statements. So as always, you can read the definition first. So basically, statements or reports that show the overall health position of the company by disclosing its various financial activities are called financial statements. Actually, these statements have a written record of all the transactions, deals, or any other activity that influences the functioning of the company, and they can be expressed into numbers. So usually listed companies are required to publish these financial statements by regulating agencies on a quarterly and annual basis. These statements should also disclose all the necessary information that may be useful for the investor for making any decision related to investment in the company. And also they have to follow various rules, various accounting rules and regulations when preparing these statements in order to ensure fair practices and presenting the transactions and activities as clearly as possible and not manipulating the statements in any way. While the reality is, at times, companies use loopholes in accounting standards to show a false financial position of the company by stating huge profits when there aren't any, hence manipulating the statements. And finally, financial statements are basically of three types, and these are income statement, balance sheet, and cash flow. There are also some other statements, but these three are the main, which disclose all the relevant information about the company. And investors can take decisions by analyzing these statements. So first let me explain what is balance sheet. Well, this statement shows the summary of various assets, liabilities, and equity of a company at a particular date. Usually it is at the end of the year, end of the financial year. Actually, I explained what assets, liabilities, and equity are in the previous section, so I don't think I need to explain them again. So if you have forgot any of it, then just go to the recap section of the tutorial and that may pretty much help you. So basically, this statement shows the snapshot of the company's financial position because it doesn't show all the transactions in detail, rather it gives an overall snapshot of the changes, that is addition of assets and liabilities of the company. Also, this financial statement, unlike income statement and cash flow statement, shows the financial position of the company at a specifically given point of time, usually a particular date at the end of the financial year, whereas the other two shows the records during a given period of time, usually quarterly or annually or both. And it is basically used by the creditors as to know whether there are enough resources, whether there are enough financial resources to operate or not. Also, it helps in knowing the current debt position, as investors are skeptical of companies that have huge debt on their balance sheets. And that's pretty much about the balance sheet. Now let's just focus on income statement. So income statement, or also known as P&L or profit and loss statement, is a statement that shows the company's income, expenses, and profits during a given period of time. So basically it deals with two types of activities, mainly incomes or revenues and expenses. This statement typically shows all the income that the company has earned during a specific period of time. Then it subtracts all the expenses that the company made during a specific period, and the result is the net profit the company earned or the net loss that the company suffered during the specific period of time. So the basic purpose of the income statement is to show managers and investors whether the company made profit or loss during the period being reported. So this statement is keenly watched by the investors on quarterly and annual basis as to know how much the company is growing, what are the sales, what are the profits, and also about the margins. Both the investors and the creditors are interested in this statement as it indicates the firm's ability to sell goods and services for more than that they cost to produce and deliver. And that's an overview of income statement. And the last statement is cash flow. So a cash flow statement, also known as statement of cash flows, is another type of financial statement that basically deals with the cash. Actually, this statement is all about cash. That is, it shows all the transactions, that how the cash is going out from the company, to which party it is going, also from where the cash is coming into the company. What are the activities that generates the most cash, and the other that leads the outflow of cash. So it has three major elements, and these are operating activities, investing activities, and the last is financing activities. So first of all is the operating activity, which deals with all the cash or bank balance that the company has earned or spent through its various income and expense activities that came into its primary business activities. That is, the end result shows that how much the company has made cash or lost cash from its primary activities, or basically main business activities during a specific period of time. Second is investing activities. It includes the cash flows related to the purchase or sale of company's assets. And the last one is the financing activities. And this one includes all the cash that the company generated from the financial activities or spent on them, such as changes in debts, new issue of shares, dividends paid, etc. So when the company pays the dividends to the shareholders, it's an outflow of cash, whereas receiving money from new issue is inflow of cash. So this statement basically is used to provide information on firm's liquidity and its ability to generate cash from various activities, which tells a lot about the company's well-being. So these were all the financial statements, that is income statement, balance sheet, and cash flow. And these are really important financial statements if you ever want to analyze a stock through fundamental analysis. And that's pretty much for this tutorial.